Welcome back, guys. It's Sean from SGT Report here with one of our all-time favorite guests, Andy Hoffman from MilesFranklin.com. Andy, you couldn't have picked a better time to join us with the cartel having its way with us once again. How are you?
Good. Well, there's always something dramatic going on, and as you mentioned, as we speak, we're in the middle of. I haven't even named this one yet. I've given up with what I call blitzkrieg attack names because there's so many of them. But what makes this one so different is that for the first time I've ever seen, the cartel no longer uses cover for what they do, like, quote, good economic news or stuff. They literally, for the past month, right in the middle of this fiscal cliff and debt ceiling and all these negative GDP prints around the world, they have just been hitting gold with impunity at every key attack time. Last night they hit it at 8 p.m. in the middle of the night when there was no one awake. And, what they're going to, right now, they've knocked at least the paper gold and silver prices down to the most oversold level that I've seen in at least 3 years. And like I said, all the fundamentals are stronger now than they've ever been. I would say that today is the most undervalued gold and silver prices have been in my entire 11 years in this sector.
I wrote the other day when we were under attack that, you got to love these guys, right? Because, HSBC comes out and gives their forecast for the price of silver for the year 2013. And they say that it'll average about $31 an ounce all year. And you know what? I wrote, well, that makes perfect sense because these are the guys that launder drug money. These are the guys that, do all measure of criminality and nobody goes to jail. And if they're saying it's going to be 31, it probably will be 31 because they're the ones that manipulate the price along with their criminal buddies at J.P. Morgan.
Well, honestly, I don't put as much faith into analyst reports as I do into what's going on behind the scenes because Goldman Sachs, J.P. Morgan, you look at all these guys, their analyst reports have been completely clueless for years. And I should know, I was a sell-side analyst at Salomon Smith Barney for 7 years. I don't believe that the powers that be at top are telling their simple sell-side analysts, write this. And, as far as predicting $31 for silver, it's a pretty precise number in an extremely volatile market with so many incredible variables going on. Not to mention, I've been doing some research. There's a guy named Steve St. Angelo who's been putting out research showing that the marginal cost of production of silver is about $30 an ounce right now. So it's really hard to believe it could fall below there, especially because it's built a base at that level for 2.5 years now. And again, to listen to anything HSBC has to say, I mean, these are the guys that are the custodian of the GLD fund. I frankly ignore absolutely everything on Wall Street, and I would advise anyone who's listening, if there still are people that are listening to what Wall Street says, completely ignore. They are completely worthless, and all they're going to do is scare you.
Let me read this from a reader at SGT Report who commented the other day, and I feel badly for Dan. I feel badly for anybody who has really been the victim of the criminal cartel for as long as we all have been. You note the 2.5 years that they've kept silver at these levels. It's really unsustainable. But you and I have been saying that for a long time, and here we sit at $30 an ounce again. And Dan writes, quote, when my average buy price is in the low 40s and knowing I'm down 25% is depressing. I woke up in 2011 during the rise and got in fast with all the so-called experts screaming it was going past 50 and beyond imminently. I went all in. Is that the mistake Dan made? He got excited, he got carried away, he went all in. And what kind of advice would you have for somebody like Dan? There's a lot of folks out there who got in when the price was in the 40s. I kept buying in the 40s.
Well, the first thing that I would say is that you got to realize who the experts are. Everyone will chase momentum, including Wall Street, when things are going up. The point is you have to find what I call the good, smart people, and the two of us, I would say, are two of them, and realize that the message we're giving is completely different than the message that you're getting. On Wall Street right now, they're telling you to sell, right, as we crashed, and that's the whole point. I mean, just from a simple investment standpoint, you want to buy low and sell high. But more importantly than that, and I suspect this is what Dan's issue is that people who don't understand that gold and silver are not investments but saving will inevitably be taken out of their positions, particularly if they are buying paper PM investments. In fact, I'll bet that what Dan is talking about is buying SLV, buying mining stocks, etc., because those things, I mean, people today are getting slaughtered in mining stocks. The Huey's down 15% this year. It was down 12% last year. and the junior mining stocks are even worse. The point is, you are seeing tangible wealth go off your screen that may or may not ever come back, and frankly, I don't believe it will come back. Whereas if you own coins, I'm sitting calmly. I am all in. I've been all in for 11 years now, and when I hold physical gold and silver, I don't consider that I am, quote, losing money today because I have no intention of ever selling it. Okay? That's the key. If you are saving in physical gold and silver, so what if it goes from 40 to 30? Were you planning on selling it? If you're not going to spend it at all, you're not going to have a wealth effect when it goes up either. You're just going to, quote, feel good, just like Dan feels bad. So again, I can only make I can only say it loud enough. These are your savings, and when you're given opportunities like this, when the paper price is taken down to not just ridiculous levels, but like I said, the most oversold level I've seen in gold in more than 3 years. This is a golden opportunity to, quote, protect yourself at lower prices. You can buy more silver and gold for your money.
Yeah, it is incredible. You noted there that Steve St. Angelo is suggesting that the production price of an ounce of silver is now higher than the spot price of an ounce of silver. It's unsustainable. We've been saying it's unsustainable for a very long time, and I just want to re-level set for everybody because, trust me, I know firsthand how frustrating this is, right? When up is down, black is white, the criminals win no matter what we do. Truth errs. Don't prevail. We continue to get victimized, it feels like, at every turn, whether it's in politics, in government, in our investments, whatever. If you're on the side of truth, you're on the losing side. It seems to have been that way for a very long time in this country. And let's just get back to basics, which is there's 700 million ounces of silver mined annually on planet Earth, and that's a very finite amount considering that there's more than 1 billion Chinese people, and there's, 300 million Americans, and there's a finite amount of silver in physical form, and there's a hell of a lot of demand. I mean, how much longer can this go on for? There has to be an end in sight, right?
Well, again, you talk about 700 million ounces of production per year, of which at least half, actually it's more than half, goes to industrial output, industrial production of things that have low elasticity, meaning they're not going to, even in a recession, they're not going to dramatically change. But of course, most of that goes to investment demand. That's what's driven the price from $4 to $50 2 years ago. And there are only, inventory-wise, about 1 billion or 1.5 billion ounces of above-ground silver on Earth because of all the consumption over the years. And most of that above-ground silver is in private vaults like ours, never to see the light of day. So it's a very, very thin inventory situation. And again, we're not losing per se, because on days like this, what this does, it just kills the miners further. There's no capital going into the miners, thus there's less capital going into the mines, and thus production is falling. Gold production was down this year, and I see no way that it's going to dramatically increase anytime soon. And the same with silver. It's been flat for some time, particularly because, remember, most of it is a byproduct of base metal operations, and if you do have a recession, it's only going to take the production down further. So, and again, I can't emphasize enough that miners, who I have no love for because they have done absolutely nothing to help shareholder value, if you sell the miners, you're only exacerbating what the cartel is doing, which is to reduce production and therefore end their paper game quicker because the physical demand will swamp them. It's going to happen. It's just a matter of will it be this year or next year. And as far as what's going on today, I mean, this is, in my 11 years, this has got to be the 20th time, the 30th time we've seen these massive smashes, and it's the end and everything. It's nothing. If you own physical gold and silver, big deal. And by the way, I will add that Jim Sinclair, who's been more right about gold than anyone over the past decade, has never made a short-term call I can remember. And for the past 2 weeks, he has been saying that before his birthday at the end of March, this whole correction will be long in the rearview mirror. And I take it very seriously when he talks.
I do too. It just seems to me, and I'm going to just make one more vent for those that are listening that need to vent, because I mean, I got to tell you, Andy, I mean, this is it seems like there's no end in sight, right? And I'm going to paraphrase George Carlin, who I know you admire and loved a lot, and he's such a truth teller. He said at one point in one of his routines, he said, there's a reason why education in this country stinks. There's a reason why it'll never get better. So you just need to get used to it. It's because the controllers want a dumbed down, obese obedient worker. And I sort of feel the same way about this paper market in silver. There's a reason why this will never change. There's a reason why you better just get used to it. It's because the Wall Street banksters want a dumbed-down, obedient investor. They don't want people getting outside of this paper paradigm. They don't want people looking for any other avenue other than fiat magic. I feel like that's where we're at. I feel like this is never going to end. And if Jim Sinclair is wrong this time, if we're still sitting here 3, 4, 5, 6 months from now, the Wall Street banksters control this paradigm. And until this paradigm ends, we're just screwed.
Okay, well, as far as what Sinclair says, again, I'm just stating what he said. I don't ever write in my pieces. I expect it to explode anytime soon. I did write today that this is the most undervalued I've ever seen gold and silver compared to fundamentals, but I didn't say that means it must explode in March. And if it doesn't, big deal. Sinclair said in 2004 that gold would go to 1650 by, April 2011, whatever, and he missed it by 1 month. So he clearly has a pretty good idea of some things, but like you said, it's getting worse and he could be wrong. But again, you go back to people who are venting, and I'm telling you, I know from experience because up until 2008, I had 100% of my portfolio in paper PM investments like mining stocks. That's the people who are venting. I'm telling you, I am reformed. I am no longer an addict. I own the coins now, and trust me, I am upset, but I am not ranting and raving and frustrated because my coins aren't going anywhere. I didn't lose any wealth as far as I'm concerned, and that's why I can't emphasize enough. I write it every day for people to get rid of your paper PM investments, which is exactly what the bankers are after on days like today, and exchange it for the real thing because they will beat you if you go in their paper arena, and you will beat them. You have already beat them if you're in the physical arena because, by the way, gold has been up for 12 years in a row, and after all this smashing, it's down a whopping 2% this year. The physical always wins. And the one thing else I'm going to say, you're talking about the bankers controlling, and they want you out of they want you only in the fiat currency. Yes, they want you in the fiat currency, but trust me, this is not planned. This is not like Lloyd Blankfein and Jamie Dimon have these big meetings. They plan how it's like the movie Fargo. They just dig themselves a hole and they dig it deeper and deeper and deeper. And now it's so deep that the crimes that they're committing are so blatant that I just saw a tweet from Jim Rickards saying, get ready gold shorts for the China floor. It's so egregious that you think the Chinese and the Russians and the Indians and the Arabs and everyone else and the people in Europe and Greece and Italy and Spain aren't buying hand over fist today. I work for one of the largest bullion dealers in the country, okay? No one is selling. We're still doing brisk business every day. It's all buying of physical. This is all paper. And if you own the physical, you win. If you own the paper, you lose.
Well, thanks for watching part 1. Don't miss part 2. Click here.